Hi everyone, I'm Matt from Look Into Bitcoin, and today I'll be looking at how to track smart money using on-chain metrics. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, we're just on the Look Into Bitcoin site, and we're currently on the Whale Shadows chart. The Whale Shadows chart looking at Bitcoin wallets that haven't moved their BTC in an extended period of time. We can see 4 to 5 years, 5 to 7 years, etc., moving at least 100 Bitcoin at a time. So right now, 100 Bitcoin at a time, current price is sitting at around $20,000. That's $2 million worth of Bitcoin that hasn't moved in an extended period of time. This is definitely the definition of smart money and larger players in the market. The Whale Shadows chart shows these clusters of colors depending on how long the Bitcoin has been inactive for and at what point they're actually moved at. So we can see just in the most recent cycle here, as Bitcoin climbed from around $10,000 to plus of $60,000, we have these huge clusters of these movements on the Bitcoin network of old Bitcoin that is moving in large quantities. That often indicates that large players, smart money, is beginning to potentially take some profit on their positions. And this is true in multiple different occurrences. Again, once we retrace back to around $60,000, we see these whale shadows decrease as less smart money is willing to part ways with their Bitcoin. And then once again, as we reach to the upside again above $60,000, we start to see more big transactions happening. We can also look at a similar metric, which is the Bitcoin wallet sizes of over 1,000 Bitcoin. Now on lookintobitcoin.com, we have a number of these charts showing wallet sizes of different quantities, but right now we'll just look at the 1,000 Bitcoin one. So this is showing the amount of Bitcoin wallets which own at least 1,000 Bitcoin. So right now that number sits at 2,152 different wallets have at least 1,000 Bitcoin in, and you can see the general trend of Bitcoin wallets increasing or decreasing as price moves to the upside and the downside. We almost see this inverse correlation. Once these wallets that are holding at least 1,000 Bitcoin start to drastically increase, as they did from around the tail end of 2018 up to the peak here in 2021, this was constantly on the rise. This showed that lots of smart players, lots of big investors were trying to accumulate as much Bitcoin as possible. And the opposite is true for once we actually begin to peak in price. So you can see not only here in 2016, 2017, as price rocketed up to $20,000 for the first time, we see the amount of wallets holding this amount of BTC decreasing quite substantially. And the same again here. If we just look at the most recent cycle and zoom in, we can see as Bitcoin topped out at above $60,000, these wallets holding at least 1,000 BTC dropped off substantially. This really does show the smart money know what they're doing when it comes to investing in Bitcoin, as they have money at their disposal and oftentimes lots of experience from holding Bitcoin for years and years at a time. So this is an interesting metric to take note of. We can see these spikes potentially when lots of investors are beginning to accumulate Bitcoin that they may consider it to be at a discount, and again once it decreases as they try to offload some of their positions. Next we can look at the Huddle Waves. Now I've taken off on this, on the key you can see here, Huddle Waves of different durations. So the Huddle Waves is the percentage of the Bitcoin network that hasn't moved in a given time period. So for example, the 10-year one, which we see here, which is this purple one, we can see that about 13% of the Bitcoin network has been inactive for at least 10 years. So that's 13% of all current circulating supply of Bitcoin has just been inactive, sitting in people's wallets. This could be lost Bitcoin or people that are just holding for the very long term. 10 years at least 13%. And we can see this for each duration period, 7 to 10 years, 5 to 7 years, etc. So we can actually again see quite the correlation between these decreasing as price moves to the upside and increasing as price begins to move down. So there's a couple different ways we can interpret this. This may be due to the fact that larger players begin to offload some of their holdings as price begins to increase, and they increase their holdings as price begins to decrease. There's this inverse correlation that again we've seen on quite a few of these large player metrics. Or it could be that as price begins to increase substantially, a lot of new money comes into the space, a lot of new interest from retail players getting into the first time. So for example, if we add in the 1 day to 1 week, which is a very short duration to be involved in the Bitcoin or cryptocurrency space, we can see that these actually peak as price is peaking, or in some cases bottoming. Whenever we see these huge volatile moves in the Bitcoin price, this is when a lot of people who are only interested in the short-term price movements become involved in cryptocurrencies. So these large players in these Huddle Waves chart that have been holding for years and years at a time, there's probably both those beginning to offload their Bitcoin as price increases, but also new people getting into the space. And as retail interest dies down, a larger portion of the Bitcoin network just doesn't move hands as often, so these Huddle Waves increase. But this is another way we can track what the smart money these larger players are doing in the Bitcoin network. Lastly, we have the reserve risk. This is one of the more complex charts we have. So if you haven't already seen our reserve risk explainer video, I'd recommend going to watch that. This is looking at the HODL bank, which is simply put the opportunity cost of the larger players in the Bitcoin network. This is looking at large long-term holders of Bitcoin and their willingness to part ways with their Bitcoin. And usually, as these have the experience of living through multiple market cycles and often have large quantities of Bitcoin, they not only have the experience but the expertise to know when is a good time to potentially offload some of their bags and when is a good time potentially hold their Bitcoin or even accumulate more. So we can see here this relation between the Bitcoin price we see in black here and this oscillator, which is potentially the most useful aspect of this tool. If we just focus in on this here, we can see every time that this ratio pops into the red zone here, historically this has been a great time to potentially offload some of their Bitcoin. This is not only true for the large players, but this is something that everyone should really be keeping an eye on, because once these big players begin to offload some of their Bitcoin, this can often indicate a local top. And the same is true for the downside. Once large players begin to either accumulate Bitcoin or be less willing to part ways with their Bitcoin, they just want to hold it for the next cycle, we drop down into this green zone here. And historically, strategic investors who have accumulated in these areas have been rewarded with outsized returns in the upcoming cycles. So just to summarize, using on-chain metrics to follow the large players within cryptocurrency can provide effective and predictive insights. Oftentimes using indicators and metrics can often help in hindsight, but not many can be very effective at telling you what may be up and coming next. This is where a lot of on-chain metrics can become very useful, such as the reserve risk, which we looked at last. We can actually use that metric to see good areas to potentially offload Bitcoin prior to price beginning to drop and when we should be accumulating Bitcoin before price begins to substantially increase. So the predictive power of following and using these on-chain metrics is something that can't be matched through traditional indicators. We can also see that the larger market players, who are often referred to as the smart money, have historically been correct in their accumulation of Bitcoin in certain areas, but also their profit taking of Bitcoin and cryptocurrency in certain areas. We can see this with the relation between the wallet sizes and the HODL waves, the inverse correlation between large players being involved in the space and the price shows that not only are the smart money accumulating at the right areas, but taking profit at the right areas too. Using on-chain metrics like this as well also helps to reduce the noise and speculation of just focusing on price action for Bitcoin and cryptocurrencies in general. This not only simplifies but often improves your own investing and analysis by taking away the emotions and biases you may face, the general retail sentiment, and the just general day-to-day volatility in cryptocurrencies, which make investing very difficult unless you are keeping a very simple strategic investing thesis for the long term and potentially following the smart money to make sure you can easily see what the big investors are doing. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. Thank you very much for watching, and I'll see you in the next one.